best lesson you have learned from your own investment journey?
The best lesson is do your best not to blow accounts. Okay, this is a bit counterintuitive. When you get started, granted you will sure blow some accounts. But one thing that I was speaking to a lot of brokers all over the world, right? Every one of them, when we discuss this topic, they say the same thing. You know, what happens is they can see what you're doing in your account. Yeah. They say that when they look at certain clients, right, after a while, within the first 2 or 3 months, they know which client is going to make money, which client is going to blow their account. The difference is this. Those that are going to blow their account, right, they do not have this thing called position sizing. Meaning to say, they see a good investment, they will throw everything in a show hand. This comes with a lot about managing your greed, managing your ability to say, wait, I may be wrong sometimes. Being humble enough to say that I may be wrong. Being a bit patient enough, right, to say that I do not need to show hand and bet on everything. Whereas for clients who become successful, millionaires, multi-millionaires, right, most of them, they are very careful in position sizing. They make sure that if they lose, they can afford to lose that amount. They don't show hand. They will break their account into a few portions. I think money management is one of the most important skills. One thing I learned is to survive long enough to really understand what's happening. You need to survive long enough. If you blow your account, some people, like Karen, she'll bounce back up. She will say, let's do it again, and then she learn. But some people, they will be so scared of it and they don't do anything anymore. So survive long enough to know what's happening. This is one thing that I've learned.
What's the best property investing advice that you can give to aspiring property investors who wants to get started and want to be successful just like you?
At the lowest level is find underpriced property. Properties they're selling below market price. At the second level is to find properties that are undervalued. That means the properties should be valued at a lot higher price than what it's selling for. The third lowest level is to look at properties that are what we call value-added properties. Look at properties you can make changes so they can maximize your profit. But more importantly, look at how to transform the value of a property, how to change the usage, the functions, and the utilities of properties. But more importantly, learn to become a value creator. Look at a property and say, what can I do with the property so that I can maximize my capital gain as well as my rental yield?
What is the best Forex trading advice that you can give any beginner or experienced Forex trader?
The first thing is you got to have a trading strategy that gives you a statistical edge in the markets, a positive expectancy. So what does that mean? We know that any trade you make is a random outcome, right? You never know which one's going to be a win, which one's going to be a loss, right? But you got to be sure that when you take 30 trades, 50 trades, 100 trades, you always end up with a positive result. So how do you make sure of that? By making sure that your risk to return ratio is always more than 1:1. Okay, so it depends on individual. Like I know one of my good friends, Kyung Hee, he's a fantastic Forex trader. He makes $250,000 a month, US dollars. Right? He always risks 1 to make 1.333. Right? He risks 30 pips to make 40 pips. That's his standard. He never deviates from that. So that's his style. My style is different, right? For me, I always risk 1 to make 1.5. So I risk 30 pips to make 45 pips. I risk 8 pips to make 12 pips. Karen, I don't know about you. Maybe you risk 1 to make 2 or 1 to make... I don't know. Everyone has their own, okay? So you have to have a strategy where you stick to consistently, okay? So you make more when you win, you lose less when you lose. And obviously your entry rules must have an edge, okay? So the edge comes from, example, following the trend, using the right candlestick patterns, respecting support and resistance, Fibonacci levels, whatever it is you use to give you an edge so that you know that you're right more than half, right? So that's the first thing. The second thing is your risk management, position sizing. So I always tell people that you can have the best strategy in the world. Let's say you have a strategy that wins 90% of the time, okay? And you can risk 1 to make 2. Is that a good strategy? Yeah.
Good.
Very good, right?
Good.
All right. But so if I have this fantastic strategy and I teach you, you can still lose all your money. If you say, okay, my first trade, I risk 100%. Then what if that first trade happened to be the loss? Yeah. You still wipe out. So the second part is to ensure that you always risk a small percentage of your capital so that in the event that you get a string of losses, which is inevitable in trading, you don't get wiped out. Right? You stay in the game long enough for your statistical edge to play out. The most important thing, least talked about thing is psychology, right? Yeah. Is being able to manage your emotions and trade consistently and not deviate from your trading strategy. You do that. That's why you're very successful in your trading as well. You know, we can say all this, but I can tell you a lot of people, right, will go in 1 year and go their year. They'll go around the bend, they will make, they will not listen, right? They will go and do it and they lose all the money, then they come back and then they will follow it after they've lost everything.
The best financial advice that you have ever received?
The best advice I would say is probably to start off small. Don't put all your eggs into one basket. All right? You know, most people like to rush. All right, by next month you want to be a millionaire or whatever, buy a new car and things like that. But it's really not that. All right, I would say that best advice would be to start slow. All right, develop your craft and be really good at it. And then that's where you put more money into the market. And that's where you put more funds, increase your portfolio, put more funds in your portfolio. And whether is it long term, whether is it trading. Also, I believe that it's good to have two kinds of portfolio. Even though I'm a bit more of a trader, swing trading, we get in and out, maybe sometimes 1 week, 2 weeks, max 1 month. But I believe in having a longer term portfolio as well. And the portfolio whereby you get your dividend income, you just put it there, you can sleep in peace, accounts, stocks which nothing will go wrong kind, it's very defensive stocks. So I believe in having both kinds of stocks. So I think for beginners, if you want to start off, know the whole big picture, know exactly what you want, understand yourself first. Are you going for trading or are you going for investing? Most people start off being a trader, but they end up being an investor, right? Not because they want to be an investor, because they are holding on to stocks which are losing money, so they became an investor. If you want to be an investor, okay, good, go ahead, and then make sure you do your research for the stocks. If you go into trading, then make sure you have a strategy, picture, know exactly what you want, understand yourself first. Are you going for trading or are you going for investing? Most people start off being a trader, but they end up being an investor, right? Not because they want to be. I believe in having a longer term portfolio as well, and the portfolio whereby you get your dividend income, you just put it there, you can sleep in peace, accounts, stocks which nothing will go wrong kind, it's very defensive stocks. So I believe in having both kinds of stocks. So I think for beginners, if you want to start off, know the whole big picture, know exactly what you want, understand yourself first. Are you going for trading or are you going for investing? Most people start off being a trader, but they end up being an investor, right? Not because they want to be an investor, because they are holding on to stocks which are losing money, so they became an investor. If you want to be an investor, okay, good, go ahead, and then make sure you do your research for the stocks. If you go into trading, then make sure you have a strategy, know how to look at the charts and all that before you have a plan, of course, before you execute any trades.